Hello traders and welcome back to my channel. I want to analyze AUDCAD. So as you can see on this chart, we have a resistance and we have a support, and we have multiple touches on a resistance level and on a support level. So after marking resistance and support level, you come and mark daily high, because you can see this is the previous move before the market dropped and the previous move before the market went up. So this becomes our daily low and this becomes our daily high. So after marking that, you come to 4 hour time frame. So on our 4 hour time frame, you can see that we have a supply area, a supply zone where the market took the selling position and then it pulled back to retest it. After retesting this supply zone, the market started showing us bearish momentum. So what you do, you mark this order block and this fair value gap and another fair value gap, and then after marking that, the previous 4 hour candlestick where the market closed before any move, you mark previous 4 hour high and previous 4 hour low. So after marking previous 4 hour high and previous 4 hour low, you move to a 1 hour time frame to see the chart very clearly. So you come from top to down. You want to take a position whereby you follow the trend from the higher time frame to the lower time frame. So this market on our higher time frame, it's showing us the selling signal, and as you can see on a lower time frame, it's showing us the selling momentum. This is a supply. This is clearly a supply. Multiple touches, then market dropped, broke from this consolidation, then dropped up to this level on our daily low, then bounced back and gave us a W pattern. This was just like a neckline. The market went up, didn't retest it very well. So I'm anticipating this market either to break this previous 4 hour low and give a retest. So I'll take a selling position to this for order block or to this fair value gap. Yeah, that's it. Nothing else in this chart. Simple as that. So let us go to another chart. So this is our Swiss franc. As you can see, this on our daily chart. So this market has been turning up. So you can see we have multiple touches on this liquidity area. This is just like a liquidity. And then we have a market structure shift. This is a market structure shift. And we have a break of structure. This is a break of structure. After marking this break of structure, we have to mark, as you can see, this market took its position from here to here before it broke upside. So we have to look where there's a fair value gap. This is the current order block that we can see near where the market is. So this is the order block. After marking the order block, you take this horizontal line and mark daily high, because we are on a daily chart. Mark daily high. That's our daily high. Then we take another horizontal line and mark daily low, because this is the lowest price of this chart. So daily low. After marking our daily high and daily low, now you move into 4 hour time frame and then reset the chart. So you can see the market clearly. We have a fair value gap here. So let me just make this a little bit smaller. So we have a fair value gap here. This FBG, and once we have our FBG, you can see this market has been trending upside and then gave us double top. This is the first top, the second top. So this market later gave us neckline here. This is our neckline. So after giving us our neckline, it broke from this neckline and came to give a retest. After giving a retest, this market dropped. After dropping, it reached this daily window and then started bouncing back, whereby it retested this another breakout. This is a break of structure. So we have, before we go to our time frame to mark that break of structure very well, we have to mark the previous 4 candlestick high. So this is the previous 4 candlestick, previous 4 candlestick high, previous 4 candlestick high, previous 4 candlestick high, and previous 4 candlestick low. So we have to mark also the previous 4 candlestick low. Previous 4 candlestick low. Okay, so let us zoom into 1 hour time frame. As you can see, this chart now, it's now clear. This is our neckline, double top, then break of structure. This is our break of structure. We are just focusing on our current price. So this is a break of structure. This is our point of interest. This is our point of interest. This is our supply area for our supply zone. This is our supply. Okay, so once we have marked that, you can see that the market is still pushing down. So the market also closed with a bearish engulfing. So I'm anticipating this market either to continue dropping and drop this for previous 4 low and give a retest and drop to this 500 or further to this order. So it will depend what the market will show me, and either it can also break this previous 4 high and continue going to this supply before dropping down. So I'll be only looking at this position during the market play around. So that's it on our, this is Frank. Let us move to another pair. This is our gold chart. So we have to go to daily time frames. Let me change it to candlesticks. So you can see clearly this chart. It's a short bearish move. It has been moving bearish since January. As you can see, this market, it's ranging at this level. So you have to mark at this level down here. So this is our support. So this is our support. After marking support, you mark also a resistance, because where we have a support, we must also have a resistance. This is our resistance level. Resistance level. So after marking this resistance level on our daily chart, we mark also a daily high. This is the current bullish. The market took its position from here and went up, as you can see, from here to this level. This is low and this is high. So this daily high, the market after reaching this position started to drop, of which we don't know if it drop further or it will reach this position, get supported before bouncing back to go to upside this level. So let me continue after explaining that. So this is our daily high. Then after marking that, we mark also daily low. This is our daily low. Okay, so let us move into 4 hour time frame. This is our 4 hour time frame chart. So you can see this market it's just like it's not going anywhere. It's just here, ranging, going up, down. So the current market, as you can see, it's still ranging. So this market moved from this level to this level. This is just a channel that got blocked. Yeah, it's a very short, small. And the market broke from this level to the upside, gave a retest, then tried to move up, but didn't get anywhere. Didn't go anywhere. So you can mark this also and see if the market is still going. It's still giving us the same pattern. So after it broke the upside, then started to range. So I'll erase this things. So let us use a price action. So this is a mitigated order block. So we don't need to name this. As you can see, this was an order block and a fair value gap which was being tested. So we don't need this anymore. So what we will do, we'll come here. Okay, enlarge this candlestick. So mark previous 4 hour high. Okay, this is a previous 4 hour high. Previous 4 hour high. And mark also previous 4 hour low. This previous 4. Previous 4. Okay, so after marking that, and the current market it's not showing us the direction where it's going, we zoom into our time frame. But you can see the current market is bearish, as in the current move is bearish. So in this market, on our daily low, we have an order block. We have found our first order block. So this is order block. And when we have an order block, we must also have a fair value gap. So this is our fair value gap, which was being retested. So this FVG is being mitigated, and this order block hasn't been mitigated. So the price came and swept the liquidity. As you can see, this week is below this bearish, the last bearish candlestick here on this FVG. So after sweeping the liquidity, this candlestick moved from this low to this high above this previous bearish candlesticks, and then started to building up. As you can see, the last bearish candlestick was this, and after that, this market has been giving us the rejection and the bearish candlesticks. The last was the bearish candlestick. So I'm anticipating if this market come down to this level or surpass to this order block and then give us a bouncing back of a bullish trend, I'll take a buy position for this level. Either it can also come and push the liquidity a little bit before bouncing back this previous high. So I'll take a position if it breaks this high, this previous forward time high, because it must also come and get listed here. So I'll take just a tight stop. I want to do TP. So I'm just waiting to see the reaction of this market at this level. So I either take a buy position high or low with this order block. So thanks guys for watching, supporting this channel. You can like, share, subscribe, and welcome to my channel again. Let us meet on another video.